The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the marvelous Monday, February 25th edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential and share with you the tools that increase your probabilities of success in any endeavor in life. Let's go get started with our quote from The Art of War. Victorious warriors win first and then go to war, while defeated warriors, they go to war first and then seek to win. Let's go check out the war, the battle between the Bulls and the Bears out here. Right now we've got the Dow up 75 points. It's up about 0.5%. The S&P a little bit stronger, up 9.5 points, up 0.6%. NASDAQ composite, the strong one in the house, well, really it's the NDX, is up 0.9%, up 25 points. The composite up 0.7%, up 23 points. Russell 2000 is the weak link in the chain right now, up $1.49. That's up less than 0.2% out there. Our call-in number is 877-927-6648. Gold not really doing much. It's been up about this same price here for quite some time. $13, trading out at $15.86. Silver up 52 cents out at $28.98. Crude, light sweet crude up 57 cents out at $93.70 out there. Natural gas on a tear, up almost 3%. 2.8%, up 9 pennies out at $3.38. Let's go start off by taking a look at the S&P 500. Right now, trade out at 1524 out here. If we take a look at the battle between the Bulls and the Bears, we take a look at right here. This is the candle from February 20th. You got a bear sash candle. That sets up resistance really at the top of the two trading sessions out here. That would be the top of February 19th. The high there is 1530.94. The high on the 20th was 1530.94 as well, right? 1530.94. There you go. Even Steven. That is your resistance area right now. Trade out at 1524. That's where the Bulls were hanging out. You had some conviction. You had volume behind the move on that following trading session on Thursday, and then boom, on Friday, created a bull sash candle out here, as well as a bullish engulfing candle. That sets up some support right down at the lower, at the trading session low of February the 21st out there on Thursday. So now we know where support and resistance we'll see. Looks to me like if we take a look at just simply a retracement level here of the, this is just simply on the daily chart that we're looking at off of the highs from February 20th down to the low that was put in on Thursday. You'll see right now just hanging out that 0.786 level. 1524 is exactly really the 0.786 so far of that move. If we do take a look and pull this back a little further, you can see a rising price channel that the S&P has moved into. If you take a look at rising price channel, you are using, how about that? You're using co-located opens and closes out here. That means you're going to use the open of the session at the lows. You're going to use the low, or the open, I should say, of 1353.36. That's going to be your first touch point, not the lower part of the candle, which would be the wick, not the price point of 1343.35. Then your next touch point is going to be the close of December 28th. That low, that close, I should say, is 1402.43. I'll get it right here, but you know what I'm talking about. The open of the following trading session on December the 31st out there, that open 1402.43. That gives you your three touch points. You need three touch points really in order to be able to create a good trend line, a good price channel trend line. In this case here, up at the highs, we got, as you can see if you're watching us on Tiger TV, maybe just listening in on the radio or your mobile device at tfnn.mobi. Don't forget, you can always see this show streaming live. Just simply go to the homepage of tfnn.com. Over on the right-hand side, you will see a button with three little smartphone devices. Click on that, and the system will start streaming live. And the archive of the show is on Channel 10 for your viewing pleasure out there. And we can see the top end of that range really secured by several touch points out here. And if I would say if the S&P, well, the S&P gets above this area, gets above the 1520 level. High so far today, 1525.84. It'll certainly go run up and tag that 1530.94 level, and if it closes above that, it'll go to the top of that rising price channel out here, probably about the 1538-ish range. But that is on your S&P. Let's go take a look at the SPYs. Take a look at the SPY. Right now, it is trading at 152.66. We can see really the same set of candles as we were looking at inside the S&P 500. You got this little bear sash candle. This is on February 20th out here. Makes a lower low. In fact, you gap down into it. What happens on Friday's session? It makes a bull separating line candle. It's a strong candle. Forget about the volume out here. We'll come back to take a look at the volume in a moment. But simply a strong candle formation from a bullish configuration. Bull separating line is a numero uno strong candle out there. If I take a look at two-day reversal signals, 0 through 5, 5 being the strongest, that is the strongest type candle. Plus, it closed at the top of its trading range. However, it did not do it with any kind of conviction. If you take a look at the volume behind the move, only 106 million shares. That's after having a downdraft of 160 million shares after making a high of 90 with 95 million shares. So that 160 on February 20th, that's volume off of the top. So far today in trading, been trading here for basically 42 minutes. You've got volume of 22 million shares out there. So 25.6, you could get 100 million shares today, which would not be too bad, but that's going into 160 million shares. Doesn't seem like right now what we've got is the SPYs saying that there is any volume behind this move that we are seeing out here in the marketplace. In fact, let's go take a look at the intraday chart. We'll take a look at a 10-minute chart here on the SPYs. We'll go ahead and refresh this screen, make sure we have all of the accurate data out here. Then we'll see if we can put together maybe an A to B equals CD or a .786 Gartley pattern out here. Looks like I've got it. You got this little shooting star. Came in at 10:10 this morning, just as we were coming into the open of this show out here. Let's go take a look at the let's go draw a pattern out here. We'll come off of the SPYs high from February 19th, although I thought it was the 20th. February 19th looks like that was the high out here. That was at 4 p.m. That level was 153.28. We'll go draw our little pattern in here. We'll see that what we've got is, well, just I guess an 84%. An 84% Gartley sell pattern. There's the .786 really at the session of about the high of about 152.52. Let me actually go ahead and do the Fibonacci retracement from high to low out there. .786, 153. Right now it's trading at 152.60. So you're still right inside that range out here. We'll see if this little shooting star candle can get some follow through. But volume-wise, other than at the open, where you did 20 million shares, and then at the shooting star, which was the candles we came into 10:10, 14 million shares. That's where your volume is. So now we'll take a look and pay attention to volume. You can see on the 10-minute chart getting into that extreme overbought condition. That means that what the market needs to do is either move sideways or pull back in order to be able to work that condition off. But with regard to volume out here on the daily chart, what we're seeing is there's not enough volume behind the move inside the SPYs. Let's go back to the indexes. Let's take a look at the next index up. Oh, I suppose we should go take a look at the Dow. Why the Dow? Because that is popping up over the highs out here, its most recent highs. Let me do this. Let me get rid of this. We're going to clean this up a bit, make it a little bit easier for you to take a look at on Tiger TV. The highs I'm referring to are the December 20th high. That level was 14,058, trading at 14,070. The Dow has been the strong dog in the house here. This is up over a resistance area. If it closes out here above the level, really, of, in my opinion, of February 1st high, which is at 14,019, it'll be the third trading session up above that level. That really should be acting as a strong support area, but it needs to close above that. Now, technically speaking, it's really a close above the downdraft candle, the February 20th high, which is 14,058. So if it does close below 14,058, there wouldn't be a whole lot of conviction behind the move out here. But you can see, really, the Dow has been traveling sideways, peeking its head just a little bit above as well, but it has not really traveled below the support level of this January 31st. That low is 13,000. 860. What does the Dow have here? Dow's got a couple of really three significant reversal patterns. It's got that 3 drive to a top. That's probably the most significant out there. We'll see if it can get above this. If it does, when a 3 drive pattern fails, folks, it's telling you that there's a significant trend that would be in place. So it is good to be watching, the Dow, even though it is only 30 stocks out there. Let's go take a look and see what Lucy in the Sky with Diamonds is doing, see what kind of move we have behind the Dow Diamonds out here. On Friday, the Dow Diamonds up with, as the Dow was really the leader out there, the Dow Diamonds moving up with 4 million shares. That's after doing a downdraft. The prior session was 6 million shares. Thus far in trading, let's go ahead and clean this up just a tad, make it a little bit easier here to follow along. Let me get rid of that retracement level just so we can see where it is that we're at. So far today, trading at 140.43, a million shares behind the move. So not bad volume in the Dow. That would set up 5 to 6 million if this volume level would continue. And you would need to also get a close above the 140.36. That would be the February 13th level. That only has 3 million shares, so it's got enough volume to take on that swing point for sure. What you're really looking for is the volume to take on the swing point of February 20th out there. So you want to see it close with more than 6 million shares in the Dow Diamonds to give you some type of conviction behind the move out there. Let's go take a look at the indexes. Let's go take a look at weakness. Let's go take a look at the Russell 2000 out here, because the Russell 2000 is still kind of sleeping. You can see here not really doing much ever since it's flat. As a matter of fact, it's up $1.30. So if we take a look at where is weakness in the marketplace, it is most certainly in the Russell 2000. If we take a look at retracements from the high that was put in here on February 20th, that high was at 931.65. All the way down to the low of the trading session on February 21st. A 919.74 would be the exact 0.618 retracement. It's gotten up to 919.36. Good enough for my line of work. So you've done a 0.618 retracement in the Russell 2000. Let's go take a look at the ETF structure out here. Let's go see what the small caps are doing. The IWM right now, she is trading out at $91 even. Steven out here, the Russell 2000, the IWM, several times has given us some sell signals out here. Of course, we had a key reversal day inside the IWM. That took place on February 20th out there, and as well had 41 million shares off of the highs and follow through on the next trading session on the 21st with 45 million shares. Friday's bounce back, a paltry 24 million shares to the upside. The IWM says, nah, I'm not going to participate in this move. 877-927-6648. Would love to hear from you. Quick peek in on the King, the U.S. dollar index. We see the King here is starting to reject lower price. Something to think about. The King getting up over a resistance area on Friday. Maybe that will act as support. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Russell 2000 just went a little red on us. We were taking a look at the U.S. dollar index, King Dollar. Before we went to break, if you're watching us on Tiger TV, what I've done is I've gone down into the 30-minute chart for the U.S. dollar index just to get an idea of where price was pulling back because it looked like we were getting a rejection of the lows that were put in this morning. And on the 30-minute chart here, one of the things that you can see here, some volume up here at the highs. The highs I'm referring to going back to the 10:20 a.m. session on February the 22nd out there as it made its way up to 81.70. Low there was 81.57. And if we come back, we take a look at the next high on the chart, we can see what was holding up the U.S. dollar the index out here. We're looking at the trading session from 2:20 in the afternoon on February 20th out there. That did 8,300 contracts. The high was 81.20. What you can see is the U.S. dollar index this morning as it pulled back into that area, pulled back with 2,600 contracts. No way enough volume to bust it down. And so there is where your rejection of price is on the U.S. dollar index at the moment. If we go peek in on the Queen and see what was going on inside the Queen here, if you caught the 9 o'clock show when we were doing the Trader's Edge as we were coming on, we were noticing at 8:30 this morning a little shooting star candle out there that was put in at 8:30 a.m. as the Euro-U.S. dollar on its 30-minute chart was making a .618 retracement. Pretty close to it, got up to a high of 133, 174, 133, 226 was the exact 0.618. Makes a shooting star, makes a bearish engulfing, and quite frankly a three-river evening star candle. That says that is a good line of resistance out there. Now we're seeing some continued follow-through. We also saw the euro get into the bought condition. That means that it has to work its way off, and of course that's what it is doing here right now. So right now is where you're seeing the rejection of price out here from a moving higher inside the euro as well as the U.S. dollar moving lower out there, and that will go ahead and put pressure back on in the commodity sector. If we go take a look at, haven't looked really at any of the spiders with you, so let's go take a look inside the S&P 500 sectors, and let's start with the XLF, the financial sector. The financial sector here really being strong. Now, not strong going back to 2007, but most certainly coming off of that November 16th level, nice and strong out here, even with some volume behind some of the moves. Now, the XLF financial sector on the 20th here makes a high with 44 million shares out there. In fact, you started to see some bullish, or bearish, I should say, configurations, some candles out here inside the XLF. The first one you saw was February 15th out there when it made a little dark cloud cover candle. That was erased on the following trading session as it made the high on the 19th, getting up to the 1794 level. Again, 44 million shares up at that high. And then what we had was inside the XLF, 55 million shares off of that. Not extreme volume, does qualify as some volume off of the top there, but also then creating a bear sash candle, getting some follow-through with that little open window here as it gaps down with 52 million shares on the 21st as well. And then Friday's counter-trend rally out there, up with 43 million shares. So the strength out there inside the indexes, inside the marketplace here, was inside the XLF. And it also didn't really have the volume or conviction behind the move out there. Today you're seeing the XLF has sold off ever since the market opened. Something to think about. Always important, folks. Go take a look at strength. Go take a look at weakness for clues out in the marketplace. Let's go take a look at some of the other sectors here inside. Let's go look at the technology sector. That would be the XLK. So the XLK right now trading out at $29.83, gapping up this morning. That's strong. Of course, the trading session isn't over. You had a really strong candle formation on Friday. No volume behind it, no conviction behind it, but candle-wise, that was a bull separating line out there. That is numero uno in strength in candle formations, of course, this morning here, running right into the reversal signal, this little bear sash candle from February 20th. We also know that the technology sector has a really nice 0.618 Gartley sell pattern. That really came in all the way back here in the early part of February the 11th out there. You had a nice little, it says 1.35 expansion of your B to C swing point, but those of you that know 1.272, to me that qualifies as a 1.272 expansion, a 0.618. You got a strong reversal pattern. That is in the technology sector. 877-927-6648. You've got the DAX is absolutely giving up its gains, only up 1.5 right now, up 114 points. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow up 38 points right now. Composite up 15. You've got the S&P up 4 and the Russell 2000 off $1.66. Today is February the 25th out there. That means that we have when is the full moon? I should know. That is today. How about that? That full moon actually is today. I guess coming in at the exact time would be 3:27 this afternoon. East Coast time would be the crest of that full moon, and so the market moving up into a full moon, that would kind of make sense out here. Of course, the lunar trading strategy has not been working really all that well here over the past several months. At least I would say new moon, full moons out there. Maybe it is back in store with the Dow making a little bit higher high out there. We'll see how the trading session ends the day. Right now we're taking a look at the 30-year Treasury note. 30-year Treasury note, we were pointing out on Friday's show, just simply taking a look at a trend line here. That trend line coming off of the highs back to November 16th, when you had the 30-year Treasury out at 152.21, and you can see several touch points out here. So this is different. There's a difference between a trend line and a channel line. In this case here, just looking at the trend line, your next touch points really can be right where I would draw mine is the December 6th area, because you can see it also contained price here on that little bounce up on November 28th. Contained price here when you came into December 31st out here. Contained price back in the January 24th level. And then we had 30-year Treasury break above that level on Thursday yesterday, just peaking itself above there. Remember, trend lines, whether it's diagonal, whether it's horizontal trend lines, what is normal behavior when you break a trend line is the market itself will typically come back and test it just to make sure that it wants to really move higher or lower, just depending on which trend it is that you're taking a look at. This says here that the bulls still are working their way up to the resistance area, which will be that horizontal level. That's where I suspect the 30-year Treasury is going to head to. That's going to be the high of the January 2nd level, that being 146.1. If you can get it close above that, well, then it wants to go ahead and break resistance. Of course, that's horizontal. If you break above resistance, that will then become support. That is the 30-year Treasury out there. If we go take a look at light sweet crude, let's go see what that is doing. Traded out 93.14 right now. Light sweet crude on its way down to the 89.47 level. That, I suspect, is really the first stop out there. I know we're all have a little bit of pain because we're paying a little bit more at the pumps, but light sweet crude wants a lower price. What held it in check here so far over the last two trading sessions have been really two things. You got two things coming together in the same general price vicinity, that being a 0.382 retracement. That's your retracement off of the lows back here in November 7, 2012, that low being 84.05, and then the high that was put in on January 30th when light sweet crude traded up to 98.24. The 0.382 retracement is 92.82. What we can see is the close was 92.91 on the 21st, and then in Friday got down just a little bit lower, still closed out at 93.36. Also, you can see this black line kind of running across the screen here. Of course, you could say, hey, Steve, you got quite a few lines running across your screen. Well, I'm referring to this little black squiggly line right here that held the lows in check. That is your 200-day exponential moving average out here. Right now, the key trading session, quite frankly, is the February 21st level out there. Friday you had just a small-bodied candle. Today, right now, you've got a little doji candle, so certainly a small-bodied candle out here. Let's just say that maybe light sweet crude travels sideways for a day or so, and then it breaks, meaning it closes below the 92.91. That would be a continuation pattern to the downside. So I suspect we're looking at around $87 to $89 in the light sweet crude contract out there. Natural gas, however, trying to get above this descending downtrend line out here that really takes us all the way back into it's where it started its subcorrection channel. That was really off of the November 28th high out there. The two red lines, the downtrending line that you're looking at if you're watching me on Tiger TV, you can see that is a new price channel that looks like to me what natural gas is trading into. It is tackling the upper boundary level of that area right now. Still have time left in today's trading session. Perhaps this channel line maybe needs to be moved up just a tad out there. I'm not going to redraw it right now, but I can see where there would be some spots where the bottom of it is really a good solid channel line. I say that because of the number of co-located opens and closes. We got 1, 2. When I say, we got November 2nd, you've got November 5th, you have the November 9th, the November 12th. You've got the session really of here January 9th as well as January 10th. So a well-established line to the downside here. Maybe this might need to be adjusted just a tad, or maybe the angle of it to the upside. But looks like this is a pretty solid price channel line. Let's go out to Denver, Colorado, to Mark. Mark, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
Excellent. Thanks for asking. Did you have a nice weekend?
I did. Did you? We got tons of snow out here.
Oh, good. So did you go skiing?
No, I was shoveling our driveway.
Shoveling. Oh, sorry about that. What's tons of snow? What would that be?
Well, not tons. I guess for us, 10 to 12 inches in the city area.
Yeah. Are you right in the Denver? Are you in Denver itself, or?
Yeah.
Yeah. So that would be quite a bit of snow for Denver, I would think.
Yeah, it's a decent storm for us. We've been pretty
did
dry.
it melt away? Has it already melted away though?
It will probably by the end of the next day or two. It's already sunny out again, so maybe.
I love snow. I grew up in Michigan in Detroit, And now we didn't get a lot of snow there. It was mostly cold.
Yeah.
But I did love snow. The problem with snow was when it started melting. Melting.
Yeah.
And, just how dirty and nasty it got. So
Well,
I don't know if that's the same in Denver.
It doesn't melt too fast in Detroit. It stays there all winter. I've got lots of relatives there. Yeah, we get a good snowstorm. It's usually gone in a few days, and it's sunny and clear again. So it's all good here.
Love that. I love that. What did you want to look at?
Well, I was going to ask you about the full moon, but right while I was calling, you were addressing it. So how about we do something else?
We can do anything you want. And was there any specific question about the full moon, or?
I was kind of playing the market as we'd be getting into a high today. So I was looking to go short today. So I was just kind of playing it that way. So.
Yeah, I've got a chart. I'll share it with everybody. If you're watching on Tiger TV here, I do track. I track a number of things out there, and the full moons and new moons we're working really, really well. If you come back here into the time frame, like November 28th, market made a nice low out here. December 28th, the same thing. But over the last several trading cycles, I would say going back, the last time that the full moon or new moon worked was really December 28th out there, at really being able to identify any type of significant change in trend out there. So, I hope you're right. I hope it does come in today.
Yeah, I know we're all short. So, okay. So the other thing I've been watching is looking at a place to get into some of the gold miners, and I've been watching the GDX and the GDXJ, and I'm wondering if you have any opinions on that. I'm still, I know it broke some swing points with volume, but I'm wondering, even just for a nice bounce out of here. Looks like the GDX was getting close to closing inside its Bollinger Band again, and I didn't know what your thought was.
Is it? Okay.
Yeah.
Have you, I haven't done I did not do the work over the weekend. I got went to a little father-daughter sorority function for one of my daughters up at the University of Florida, and that was a great time. We had a great day. I got to show her exactly my presentation that I did for folks last Wednesday, and showed her the secrets out there. So that was actually pretty cool. Just hung out for the day.
Yeah.
What's that?
I just watched that over the weekend.
Oh, did you? Okay,
yeah.
Cool.
Yeah.
So we sat down and then went over that for a couple of hours and kind of opened her eyes up to a trading pattern that was out there. And so I didn't get a chance to really dig down under the covers for a number of stocks. Mark, have you taken a look at some of the individual stocks themselves, or you just prefer playing the 200 and 300% ETFs that are out there?
Well, there's the regular GDX. Sometimes I play some puts and calls on that. I was kind of intrigued a little bit by ABX.
Okay. So we'll take a look at that, because I haven't. First we'll take a look at the GDX. So on the GDX, what you've got to contend with here, and you're taking a look for a little bounce. Right now, you'd like to see some type of conviction by the bulls. I'm going to get rid of the A to B equals CD down pattern that's on my screen here. But what I would be paying attention to here, if you wanted to play this, is let it prove itself to you. The resistance on this is going to be that gap down which is only a few trading sessions ago, February 19th, that 39.16 level. And right now it's just contending with the actual day when it gapped down on February 20th, and that high is 38.88. I would say if this were to close inside the 39.16 level, that might set up a trade. Now, what you'd be looking for just as a quick trade is probably, the problem with this is that, it has another gap down just slightly above it. So you've got other natural potential resistance here from February the 14th out there. So short of seeing some type of real bullish candle out here, I don't see it inside the GDX. But since you brought up ABX, let's go take a look at something else that you were looking at. So ABX, which is Barrick Gold, folks, out there. And if we go take a look at ABX, we'll see if we see anything that is different out here on this stock chart. So no bullish real candle configuration here to give you an idea that, and let's take a look at what it was testing. So it was testing a high volume swing point low. So let's go take a look at that. And that specifically is the candle, folks, from July 26th out there. And the low on ABX during that trading session was $31 even, Steven. And right now that area is holding as resistance. I would say if ABX could get above that level, That which would be the nice thing about that, it would also close and be getting above the February 20th candle out there, which is the body that it's trading with inside right now. Then I would say that might be a little bit nicer trade. And the reason is, specifically on ABX mark, is because if you take a look at that February 14th trading session, you probably did. You've got a nice little high volume swing point high out there with 25 million shares. So it would say to me that the 33, 36 area would be a game. And then you've got a little high volume bar out here, downdraft. Looks like probably an area of some resistance. If it can get above the session of February 14th, it might want to make its way all the way up to $36.56. So I think that might be a little bit better trade than the natural resistance that you might find in the GDX.
Yeah, and it also, when it broke those July, the other thing I was looking at, when it did break those July lows at 31, it did it on lighter volume, so it was a false break.
Yeah, it did, because the real high-volume bar, folks, and so, Mark points out a really good thing. I'll draw the line across my screen here because it might have confused you, might have given you a little of a head fake, and the volume that Mark's talking about is 26 million shares on that July 26 level. Well, that high-volume bar you see on my screen, that's actually the high-volume bar that I think ABX is likely going to try to shoot for, which is the February 14th level. And so as it really broke that July area, did it with 11 million shares going against 26, and then 16 million shares going against 26. So I'm with you, but I would think that this would be the problem is with these small body candles traveling with inside that February 20th body is that if it closes to the downside, you've got a continuation pattern to the downside, volume or not.
Okay.
Inside this. So that's why I would let it go ahead and test that out.
Okay, great.
All righty. Hey, thanks for calling. Thanks for sharing all that snow information with us.
No worries. Bye-bye.
Okay, take care. Right now we've got Priceline is the leader in the clubhouse. Priceline is up $6.30 out there. Google's up $4.29. Affimax, AFFY, down 85%. That thing is just nasty as can be. Dillard's down 8% this morning. 3D Systems and Stratasys also trading down significantly. You know what I didn't do during the first show? Let's go do that because we had taken a look at both 3D Systems and Stratasys, and we'll go ahead and pull those up here real quickly to take a look at it. And then we're going to go into X1. But as we take a look at Stratasys here, Stratasys is had some volume here, has some real troubles. It's going to come all the way down to this black horizontal line. That's the area of resistance or support right now. It should probably act as a support level, that price point being somewhere right around the $53 and change. It's at $62 right now. And this is the weekly chart. On the daily chart, let's go take a look at some volume behind today's move. So gapping down an hour and 20 minutes of trading here. It's done 965,000 shares, and it's trading inside this high volume bar out here from September 18th. So that doesn't really look that great. It's better than 3D Systems, but this did have some volume off of the top. I see we're going to break. When we come back from break, we'll go take a look at 3D Systems, but I want to go take a look at X1 with you. Why? Well, I don't think the 3D printing area is over at all, and I think X1 might be the one for us to go take a look at. 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 13 points right now. S&P off 1. NASDAQ will be red here in just a little bit of time. It's up $5. You've got the Russell 2000. That's the weak link down $3 right now. Folks, if you're looking to go short, that's the place to focus. Go take a look at the Russell 2000 out there. Yes, the index is absolutely weak as well, but I would be hunting for treasure inside the small caps out there. That is where I would be looking, so I'll pass that on to you. And I think that this market, and I really covered it inside my newsletter this morning. Over the weekend, I get time to even spend even more time and just lay things out, just lay the divergence that is out there and the hidden signals inside the marketplace. And the hidden signals inside the marketplace say this market has got much more room to correct. I know there's folks that talk about on the air, and I'm not talking the TFNN air, on the other television air out there, about people expecting a market pullback and a correction. But the reality is I don't think there's a whole lot of people that are actually playing it, and I think that's a bad scene out there, because then you don't have natural buyers, on the way down. So be careful out here. As I said earlier, the market's really the great time. If you are not in the market, either long or short, this is not the time to be going long. If you get a close above resistance areas, then that's a place, and you get it with some conviction, then that's a place to move in. But otherwise, you're up against some pretty significant resistance in the marketplace. But let's go back and take a look at 3D Systems and then X1 before we are off the air and we hand things over to our man Basil Chapman for the next leg of the show out here. But as we take a look at 3D Systems, it's down with volume today, gapping down already at 7.8 million shares, coming back below a most recent breakout area. This is getting towards the oversold condition, but it has further to go to the downside out here, and this has damage. So this is a damaged stock chart from the standpoint of volume off the highs from January 28th out there, big volume off of the high, and so I think there are better places if you want to play the 3D printing area, and that's going to be the most recent IPO of X1. And X1 taking advantage of pulling back over the last several trading sessions because of the behavior of 3D Systems and Stratasys out here. So if we take a look at X1, this thing here is trading out at $25.52. Debuted, IPO day was on February 7th. That price spread was $23.50, anywhere up to $27.25. Volume today on a pullback here so far is 244,000 shares out there. And that's going against 519,000 shares and 981. Now, with only having a dozen trading sessions, if that, it looks like maybe it's an even dozen out here. It's pretty difficult to do any kind of technical analysis on this. If I go ahead and put it on a 30-minute chart out here, maybe we'll get a little bit better feel. And on the 30-minute chart, what you can see is it's trading inside that 10:30 session, that initial pop from 9:30 to 10:30 on February 7th out there, and that's got good volume, 3.9 million shares. This also may be an area where you'd start taking a look at putting on a position out here, a long position inside X1, or give it some time. But pay attention to X1. Maybe what you do is you wait for the next breakout and then go ahead and draft right behind that. But stay tuned, folks. We got Basil Chapman coming up next, and then we go out to Tucson, Arizona, to Larry Pesavento. They've had some wild weather out there. Was quite the wild weather for the Accenture, I believe it was the Accenture Match Play Tournament out in Tucson. And then after Larry, we've got Daryl Martin and David White from 2 to 3, Ken Shreve 3 to 4, and none other than the Tom O'Brien Show from 4 to 6. Been great to be with you all morning, folks. Have a great day. Look forward to seeing you in the AM. Take care.